All right. Good morning, interwebs. For for those of you that are watching us live, welcome. For those of you that are going to watch in syndication or catch the podcast, good morning or afternoon or evening to those of you as well. Nonetheless, welcome to another episode of How I Met Your Mortgage. I'm your host, Adam Smith, with Just the Tips Coaching. With me, as always, is our marketing director, Jen Wayboer. Good morning, Jen.
Good morning.
Fresh off of a Colorado Rockies camping trip. I'm sure that was a fun weekend. And
It's lovely.
it was lovely. And we've got a really great guest for you guys today. For those of you that are in the mortgage industry, you probably know him. If you're not, if you're in the real estate game, which obviously a lot of our viewership is, or if you're in another sales arena, which probably makes up the rest of our audience, it is with no small amount of pleasure that I get to introduce Jason Frazier. Jason, good morning, my man. How are you?
I'm doing great. What's up?
Just living the dream here. Another stupid, hot, dry day in lovely Denver. Don't let the palm tree in the background on the chroma key fool you. That's where we do most of our broadcasting from, although Jen and I were just talking about setting up another computer to be able to do this from our cabin in the woods. We'll see how that goes in the months to come. But yeah, Jason, give us a little background about you, man. Obviously, Jen and I know who you are. For the most part, the mortgage industry knows who you are. We catch your podcast. A lot of our close friends and colleagues have been on it. But tell our audience about you, man.
Yeah, so I am the Chief Strategy Officer for EPM, which is a mortgage lender based out of Atlanta. I've been in the industry for a little bit over 10 years. I grew up in the industry, didn't work in it prior to joining. I didn't join mortgage until 2009. It's a family business. The family's part owners of one of the oldest mortgage lenders in the country, going back to 1887. Mason McDuffie out of the San Francisco Bay Area.
Wait, 1887.
1887.
125 years we're getting on here.
Yeah.
Wow.
Yep.
All right. Cool.
Yeah. So I haven't been around that long, but I grew up in the industry around all mortgage professionals, real estate professionals, and but my path was different growing up. So for my without boring everybody, I came from the venture capital and technology startup world.
Okay, that's interesting.
Yep. Yep.
And why would you make that change? How did that come to pass?
Well, so I used to work for a guy named Peter Thiel, who was the founder of PayPal. And so I worked with a lot of those guys like Sean Parker, one of the co-founders of Napster, early president of Facebook.
Sure.
Some of the people, like it was a cool world to be in. Like one of the guys I used to work with is now the ambassador to Sweden. And so some of the people are in the President Trump's cabinet. Administration. And so it was just a real cool world, but it was a very taxing world, right? So me working, 48 hours, 36 hours straight at the time. I worked for a lot of different of Peter's portfolio companies as a consultant, but primarily I worked for his hedge fund, which was called Clarion Capital. It's Teal Capital now. We grew that from a little bit under, I think it was like around 80 million when I joined. And then, when I left, it's about 8.6 billion of assets under management. So it was within 4 years. So they crushed it. It was a great experience, but it was a lot of work. And honestly, I hadn't taken a real vacation. I had met my wife, who I'm married to right now. And, I took a sabbatical. I made enough money. I didn't need to work if I didn't have to. So I literally, since getting out of school, I've always been like the on-call guy, the tech guy. So I've never really just had a chance for a true vacation. And so that lasted about 2 weeks before I got bored out of my mind playing golf. And I decided, I'm going to get back into it and started doing consulting. I didn't charge anything. I did philanthropy work. So nonprofits, churches, things of that nature, helping them with their like IT and, just strategy, type marketing type needs. And then at the time, my company, my family's company, Mace McDuffie, were looking to do something different. I had helped them back in 2005 to get started with their technology plant. My cousin ended up running the department for the company, still does today. And so they brought me on as an executive. And after consulting and saying, look, you guys are ancient. You guys, look, if you really want to do something different as a mortgage lender, and I give them credit, in 2009, not a lot of companies were thinking about that. They were more of status quo. Even today, a lot of them are still status quo. But I came from a world that was completely opposite of the mortgage industry as far as tech, as far as modernization, automation, everything. So I saw a real opportunity, right? There's a million guys like me in that world, right? But in the mortgage space, I thought, hey, this was an opportunity to, kind of make a name for myself, join the family business, work for my mom, see how that goes. and then the rest is kind of history.
Very cool. And there's a really robust subject in there as far back as 2009 in your experience that we do still see a lot of mortgage companies, a lot of real estate companies on, really not doing what they need to be doing to embrace technology, systemize, automate, blockchain, on and on. Mm-hmm. Give us a little insight there. And I'm not just talking about the big guys. Like, I don't want to mention Quicken, but I'm going to mention Quicken. That tech has been and is undeniable. They are great at capturing in people. They're great at letting you do so much of the process straight from your phone, from your tab, from your computer, whatever. And obviously, there may be something that's left to be desired beyond that point in the process, and I think a lot of our colleagues would state that as well. But a lot of these companies, big and small, are really either head in the sand or really struggling to keep that kind of pace. What kind of insights, what kind of ideas, what kind of, instruction, I guess, would you give to these people? Let's have a little bit of a scared straight program here for the people that are either ignoring it or are struggling to keep up.
Yeah, so you're singing my song. As anyone that's followed me for any period of time knows that I am a disruptor when it comes to how I look at the industry and how things need to be done. Definitely, I'm definitely a pain in the ass to the traditional mortgage model that is, continued to endure despite every evidence to the contrary that you need to modernize and need to do things different. So first and foremost, one is, and I'll probably say some things just because it's the easiest way to say it. May sound cliche, but lenders really truly need to unlearn what they've learned, right? And also, what also needs to happen is they need to start hiring people that have experience outside of the mortgage industry, especially in key positions like marketing, technology, strategy. Even though I've been in the industry for 10 years, most of what I do has been developed way prior in other different industries. Because unfortunately, a lot of the professionals that are in the industry have only ever worked in this industry. And again, there's nothing, and I say unfortunately, not meaning, not saying that, it's really like their fault or anything. What I'm saying is that there's a downside to not having perspective on seeing how other industries run and how other, especially when it's consumer driven industries, right? Especially if you come from banking, if you're from banking, like traditional banks, you are so out of it from like down to the street consumer as far as, what do they care about, what they're trying to do. And we can see that every single day with the type of marketing that's put out there and the type of messaging that's put out there. So one is you got to unlearn what you guys have learned this, entire time and do things different. The reason why Quicken has been the only mortgage company that has created a brand synonymous with mortgage. And I'm telling you, this isn't like, I think everyone knows that, right? If you're in this industry and you don't know that, you really should. But it's just like with a Coke, a Pepsi, or anything like that. When you think soda, you think Coke or Pepsi. I guarantee you, and I've done this, not just me like guessing or whatever, but I've done this with, I do this all the time because I like to talk to just, people to see that have nothing to do with our industry. It's one thing to be in the echo chamber and I ask you, Adam, like, hey, da-da-da-da. You're going to obviously have the perspective of being in the industry. But when I talk to my Uber drivers, when I talk to people at the airport and stuff like that, I said, hey, if someone says mortgage to you, what's the first thing you think of? 95% of the time they say Rocket or Quicken, right? It's because they advertise everywhere. They do some other marketing that people don't even know what means, like micro influencers. I said that at a conference one time. 99.9% of the people were like, what the hell is a micro influencer? And I'm like, well, Quicken's doing that. We could do that. But the problem is that we don't think about doing things. Why? Because Quicken takes what like the main advertising and marketing machines all over the world are doing and applying that to reaching the consumer first, right? No other lender does that. None, not zero. There's lenders that are better at it than other ones, but nobody does that at scale, especially, right? And so the problem is that we're not going to compete. You're not going to spend Quicken dollars, and you're not going to do Quicken strategy, right? So stop trying to beat Quicken with a shoestring budget. It isn't going to work, right? Now and I could talk about that later, but there's ways to compete with them. But understand that that's when people think mortgage, they're going to think Quicken, right? And so as a mortgage lender, unfortunately, and I've worked with a lot of them, I've consulted with a lot of them, and unfortunately, there's just a lot of red tape. There's a lot of bureaucracy. There's a lot of entrenched minds of like, this is the way we've always done it, and this is the way we do it. I tell you, the amount of times that I've heard, if it's not broke, don't fix it, drives me nuts. That is a cancer on our industry by doing that, because we did something 5 years ago and it was successful, 10 years ago it was successful. Anything prior to the financial meltdown is irrelevant, right? And what I mean by that, not experiences, not seeing, not learning, but it's irrelevant. Nobody cares how you did your business from 2000 to 2008 when all you had to do was just have a pulse, and be a human being to get a mortgage, right? And I'm not saying that there weren't professionals. I'm not saying that they didn't do a good job. What I'm saying is that none of that applies to the world we live in right now, right? Now, you could build off of that and you could look at that. And this is where a lot of people I rub the wrong way when I say that. But I'm just saying it's as a company in today's internet connected world, all of that is irrelevant up into social media, technology, consumerism at scale. All of that is irrelevant, right? So if you're a mortgage lender, you need to think, and it's going to, again, cliche, you're going to need to think different, but you're going to need to be different. That means instilling a different culture. And a culture isn't something out of a box that you would apply. It's something that you do on a consistent basis. You want to create a new culture, then do things differently on a consistent basis. That's going to create the culture. You're not going to apply it. You're not going to bring a culture person in and all of a sudden you have a brand new culture, because if you do that and then half your executives are still sitting there, talking about, capital markets in 2006 or something like that, none of that is actually going to matter, right? It just isn't. Or same with underwriting. I remember this and that. And again, it's no dig. This is I always before I do my talks, I usually say, look, everything I'm going to say, just understand that it's rooted deep in my passion and love for this industry, right? It's not me just trying to throw stones or me trying to be, an a-hole or a jerk or anything like that. It's just me looking at what the problem is. And you know what? Behind closed doors, I've talked with leaders of some of the top 10 lenders in this country. They all agree with me. They do. Now, I have not had one say you're wrong but what everyone says, we can't fix it. Right? That's the mentality. We're going to try to improve in little steps. And I get that. But the problem is that you need to have a wholesale revolution of the mentality of what a mortgage lender should be, right? We should have the easiest job. We're fulfilling dreams, right? Like at the end of the day, we do our jobs right. We could change a dynamic. We could change generational wealth for an entire family, right? That's emotional. No, it's not. We're not selling cars, right? We're not selling iPads or iPhones or anything else. That's a quick consumable, right? Like that's going to go out of style within a year. Like we can change the lives of children. You know what I mean? And I know that's a little too much for people to too rah. It's like I'm just in it for whatever. I get that. But let's say, like, if you are in it for the money, if you are in it to do that, if you really buy into what I'm talking about, you're going to make more of it. Right? Because that's the emotional. When you look at commercials, and anyone that's listening to this could do this right now. Look at the marketing that we send out, and then look at marketing of a modern company like Quicken or Zillow and how they're trying to reach the consumer. I will guarantee you're not going to find anything that's an A to A, apples to apples comparison. You just won't, because what we're going to throw out there, rates, winterize your pipes, here's a new pumpkin pie recipe, here's all this other stuff. But Zillow, what is Zillow doing? Zillow's going out there like, hey, the before state, man, I don't know if I could afford this house. Got a family in front of a dinner table. watching the kid play outside, and then they closed on their house and Zillow made that happen, right? That is going to be 1,000 times more effective than you sending out a rate email or some other stuff that people just don't care about, right? Now, you don't connect with it. And look, and we can't use this year as an example, right? No, you can't kick a can for anything. You can't kick a can without running into a deal or a refi. We got what is it? I think 5 trillion, right? Of business that's in the money, or 4 trillion, whatever it is. Somewhere, either way, it's like double what we normally have, or triple what we normally have. That's in the money right now to do business, right? So don't use this year as an example for anything, right? Like you said. So from a lender perspective, you got to cut out the bureaucracy. You got to cut out the red tape. You got to stop saying can and can't. You got to start asking yourself, what if? Start with a big whiteboard, a big, huge wall, and just start, what if this happened? What if this happened? And then you start crossing stuff off that's unrealistic, right? You start crossing that stuff off, but eventually you're going to be set with a lot of different things that you didn't think about before, because even every human being is going to have an entrenched bias based off their past experience, right? Someone comes, you hire an executive from Wells Fargo to a new company. Do you think that all of a sudden that person's going to do anything different than they did at Wells Fargo? No, right? Or Bank of America, or we're just playing musical chairs with the same people and expecting different results. And it just doesn't happen. So even go outside, and they don't need to replace someone. It's yes, you want to have that institutional knowledge of a seasoned executive in this industry. Absolutely. But have some other voices in the room so people will start thinking differently. And not only that, but learn to take some risk, right? And honestly, it's not risk. We've already seen that it works. Look at Quicken, look at Zillow. End of the story, period, right? But you need to figure out how I could take some risk. And as loan officers, realize, look, and I'm talking like on the retail side, if you're working for a lender, help them improve, not complain, not say this sucks and that sucks and all that stuff. Help them improve, everybody. And same with brokers, right? Help the lender partners you're working, help them improve based off of what you're seeing locally, right? This is a team game. We need to all be in it together. And lenders need to be receptive of that information. And honestly, and look, it's not a plug for EPM, but that's one of the reasons why I chose to go to EPM, because I saw that, not just as in what was told to me, but actually what I saw and what they're trying to do to actually be a different lender. We're not going to do things the way they've always been. And so I think for me, as I look at the landscape and I look at the lenders and everyone's like, well, we're still doing this and market share and all that stuff. Look, I come from the industry of disruption, right? Every single person that I was around and used to work with were told that none of that was going to work. That Facebook wasn't going to be a thing. YouTube wasn't going to be a thing. Yelp, LinkedIn, basically everything that we live our entire lives around is a thing now, right? And so, I think as humans, one, we are way more wrong, or we're wrong way more than we're right. And especially in our industry, we are wrong most of the time, collectively, everybody, of what we think is going to happen and what consumers are going to deal with. iBuyers being one. That was the biggest misconception ever of people thinking that wouldn't be anything. We'll look at Phoenix, 10% market share, right? Or even more, right? For something that no consumer would ever do. And then look at Uber and Lyft, right? And I bring this up in my talks. I know it's an easy comparison to make, but you got to understand the taxi industry has been around for 100 and some years, right? Okay, Uber and Lyft disrupted that thing within 3 years. And the only stat you need to look at is business travel, because it's trackable because of receipts and stuff like that. Business travel, taxis accounted for 84% of market share, and in 3 years, they were less than 6% market share, right? In an industry that they created. And for some reason in mortgage, we think that's not going to happen to us. Consumers are never going to do that because of the ticket price or whatever. Look, you got freaking car vending machines now, right? Like you got car delivering it. Like, I mean, come on, people, like just wake up and realize that our industry, if anything, is more disruptible than anything else, because we are so entrenched and biased on the way that things have always been, and it needs to stop. Otherwise, there's only two choices for our industry. One, either we disrupt the industry from within to create the industry that needs for the modern consumer, with us being involved the entire time. The other option, which has already happened and continuing to happen, is you have fintech lenders, outsiders, people like Quicken, people like Zillow, that are going to come in and disrupt, and then we are going to be left with the new industry that they create. And I'll tell you right now, if you've ever been acquired by anything, because that's really what that is, that's an acquisition, right? And if you've ever been the company that's been the one bought or been the one acquired, you don't make the rules. You don't make the decisions. You are left with whatever has been created in this new entity, right? Those are the only two choices. And if you don't believe me, look at the past 20 years of disruption in other industries that have been disrupted. And that's exactly what's happened every single time. And that's what's going to happen to our industry if we don't wake up and start doing things different.
Ooh, there's some real scared straight stuff in there. That is
you asked for it, so I gave it to you.
Absolutely. That is fantastic. And there is so much in that diatribe, in that monologue, that we could go back and analyze and pick through that would be real solid boots on the ground type of processes, activities, tips, tricks, and ideas. There are a few that certainly everybody ought to look at. We're a prime example. Jen, did you ever do anything in the mortgage industry before doing the marketing for our brokerage?
No.
No. How about in the coaching world? Well, actually, that's more true. You actually had done some of that, although completely unique. So, Jason, you make an amazing point there. People from outside the stodginess and the rusty cogs of the mortgage machine as it's been for 125 years are going to be the ticket to finding that WD-40, that penetrating oil, and getting those cogs moving again. It's absolutely true, because an exec at Wells goes to be an exec at B of A, and the exec at B of A goes to be an exec at Chase. Nothing changes. We're still operating in the same little bubble without the original ideas, thought processes, content that we're seeing out of shit like Quicken. So, yeah, that is enormous right there. And so scalable that if you're a really small operation, let's look at Dugan, let's look at Chastity. These are, people acting as broker owners. They've got a little bit of support staff, that kind of thing. All the way up to Wells Fargo. I insert eye roll here for those of you that are catching this only on audio. Every one of these organizations, from the onesie twosie all the way up to something like Wells, could be doing it more modern, doing it differently, doing it in a manner that's going to allow those rusty cogs to start cranking out good ideas again. Good content, good movement, so on and so forth. Now, Jason, I think that there's some issues that are inherent in, I jump in an Uber, I ask the driver who he associates with mortgages, Quicken, Rocket, without equivocation. He's never heard of the Core Finance Group. He's never heard of your company. He's never heard of Michelle Dugan and Chastity Graff and on, right? But we don't associate a lot of these big institutions like Wells, like B of A, like Chase with that, because it's not really what they do. I mean, they do mortgages. Don't get me wrong. You want to go to Wells Fargo, you can get a mortgage. You can get a fraudulent account opened up in your name. You can get a car loan.
Or a few of them.
A few of them. You can get a credit card. You can get a car loan. You can get a line of credit. So some of these institutions do so much that it would be difficult for them to be that household brand when we say the word mortgage. For Quicken, that's already leaps and bounds right there. We've got an entity, like a lot of you listening are, where you are a specialist in your one particular field, your one particular asset. And obviously these big retail depositories can't boast that. And I can't remember the exact colloquialism about, you can be an expert at one thing, or you can kind of know a little bit about a lot of things, and that's what we get out of these big retail depositories. So it's a different animal for sure. But yeah, there isn't anybody in any business on this planet, whether it's the solopreneur or something as big as Quicken. I don't even know what the biggest employers on the planet are right now, Microsoft, Apple, whatever the case may be. Although those two would be a bad example of where we could find that penetrating oil to get those cogs moving again. And boy, I really hope you guys listening are picking up what Jason's putting down, because there is a lot of logic in that, no matter who you are. Seriously. And
Yeah.
it really doesn't matter what level of business you're conducting. There is some wisdom in that. So thank you, Jason. Thank you so much. I hope our audience is as appreciative of that as Jen and I are. Jen, give us your outsider's perspective. Because, like Jason, you came from the outside. You hadn't had a lick of anything to do with mortgages prior to that. You'd done tech, you'd done VA, you'd done direct sales, you'd done MLM, all these kinds of things. Did that play as a benefit to you like it did to Jason to be able to see things from the outside?
Oh, for sure. And I mean, I was a black sheep when it came to the direct sales MLM world too. One of our speakers at Mile High, she and I always talked about how we were the black sheep because we didn't drink the Kool-Aid and we didn't do things the way they wanted us to. We wanted to shake things up, and absolutely coming into the mortgage space of relationships first and seeing these big corporations that aren't putting relationships first, and what we coach on at JTT, and bringing it down to be more personalized and more specialized. But I think especially obviously I know the broker world a little bit better, have such an opportunity to make things a little different, to shake things up, to focus on social media, to focus on video, which a lot of them still aren't doing, which amazes us. I think especially my experience in direct sales and how it's really, even from a banker's perspective, you're representing this company, but it's your own business. And what are you going to do to make your business different from what everyone has always been doing?
Well, and Jason hit that nail on the head. Help your organization conduct better business.
Right.
So you brokers, help the mortgage brokers, help the wholesalers deal with that. For those of you that are in retail, help your bank deal with that. For those of you that are in real estate, help RE/MAX, help Keller. Do these kinds of things, provide that insight, provide that input so that you are able to make your experience with your client, your customer, your consumer that much better. You're really getting to play middleman in that sense between what the consumer sees, feels, and hears and what your big ass organization is putting out there. And right now, outside of things like the Rocket, there's an enormous disconnect. I could not fathom how difficult it must be to be a loan originator at Wells Fargo today, to be a real estate broker at Keller Williams today. These kinds of things, because of how different the consumer experience from day one, from what they're getting from their media, their social media, the TV ads, the radio ads, so on and so forth, and the experience they're actually going to get with you dealing direct to consumer, the disconnect is enormous. There are a lot of gaps to bridge in there, no question. No question. And Jason, just because I know full well I'm going to check our time and I know we're going to run over. Sorry, Jen, because we always do when we have a great guest. Are you still doing your podcast?
Yeah. So I have two. One is the Mortgage X podcast that I do with Christine Beckwith.
Yep.
That's kind of the main podcast that I do. And we do a couple new series on that. So love doing that. Christine's an awesome. She's a coach, and for those that don't know Christine Beckwith, she's an awesome coach, 2020 Vision, success coaching in the industry, and she's a wonderful interviewer and co-host. And so that's Mortgage X, and we've enjoyed a lot of success for that. We actually recently was just brought into the CMLA to do. To moderate a panel because they were fans of our podcast. So it's podcasting is definitely something that I'm a big fan of. We have also have the Real Disrupt Collaborative, which is basically a podcasting family of different podcasts. You mentioned before we went on Michelle and Ashley. So they have Blondes Have More Fun.
Absolutely.
Yeah, they're part of the collaborative. Yeah, they're part of the collaborative amongst others as well. Next Level Loan Officers, I actually produce that podcast for them, for the Next Level Loan Officers coaching group, and I'm also a marketing coach for them as well. And then I have Marketing Interrupt, which is my marketing focused podcast. So that's something that I've been doing for a while. I haven't done the last couple of episodes because I'm trying to decide whether I want to change that a little bit, instead of just focusing on marketing, but focus on some other things as well. But it's fun. Like, I just like doing it. I don't really care. It's great for attention. It's great for just putting yourself out there and maybe as a thought leader or whatever it happens to be. But I love doing it. I enjoy doing it. And it's definitely, since I will say it's definitely made a difference in kind of the things that I've been able to do and opportunities I've been presented with.
Yeah, see, I only do it because all of those people said I had a face made for radio. So the podcast
Me too, man. Me too, buddy.
Easy way to do it. Yeah. Hey, for the rest of you listening that are as ugly as Jason and I are, podcasts are a great way to make sure people can hear you without having to look at you. All right. So, Jason, let's make sure we get some of those highlights in there. We certainly want to make sure we get a link for the Mortgage X podcast because it is amazing. Give Dugan and Ashley a little love. Find the link for that Blondes Have More Funds podcast because that one is also a lot of fun, despite the fact that it is circumnavigating around funds, F-U-N-D-S.
Yep.
So yeah, that's really a great one. And yeah, we all know, well, those of us in the industry know who Christine is and that she is amazing. So yeah, maybe what we'll do next time around is get the both of you to come on and see how that dynamic looks, because that would be a kick in the ass. All right, and Jen, I'm sure you're eyeballing me. I'm sure we're over. All right, I got it. All right, so for those of you watching live, thank you for tuning in. If you're catching us in syndication or on the podcast, thank you again for that as well. This has been, episode 31 of our third year of doing this. We have a lot of episodes out there. If you want more copies of that, if you want to listen to other episodes of that, if you want to catch our weekly video blog, the Weekly Little Tip. Yes, we try to keep this borderline inappropriate. I saw some commentary through your social media. Yes, How I Met Your Mortgage is brought to you by Just the Tips Coaching. And everybody knows that, if you crack the door to sexual innuendo, I'm going to come through it like the Kool-Aid Man. Oh, yeah. Okay, so that's true. Jen's going to confirm. So that being the case, Jason, thank you so much for doing this with us. And I'm going to have Jen book another episode with you the next time Jen's nodding like, yeah, I'll do it. But we're probably booked until May or June, I'm guessing.
May 24th, I think, is our next available day. Yeah.
So, if you would like other episodes, if you'd like to be a guest on How I Met Your Mortgage, or if you want any of that other nonsensical content that we put out there, go ahead and use that text code scrolling across the bottom of the screen for those of you watching. For those of you listening, you can text TIPS to 63566 and it'll ping you back all of that content. Jason, don't go anywhere. I'm going to run our extra, and for the rest of you, thanks for joining us. We'll catch you next week.